Welcome back to the Daily Nugget, Property Insights Daily. One question, 20 minutes or less, 7 days a week. Myself, Lawrence Lott, today joined by Matt Harris, a property tax specialist and a fellow property investor. And Matt, question to you today is, what is going to happen in the New Zealand market with rents? This is something big that's in play at the moment. If you invest, it's obviously something you want to pay attention to. If you rent properties out there, if you can't get into the property market yourself, something you're also paying attention to, because is it going to go up or down with a lot of the new changes?
Yeah. My personal prediction, Lawrence, is that rents will rise a minimum of 30% within 12 to 18 months from now. And there's a huge amount of things to talk about as drivers for rent increases, but I'm going to try and keep it, within the mandate of a daily nugget for you. So I think, firstly, you've got to look at a little bit of a history over the last sort of 2 to 3 years of Labour government, and it's probably unfair to point the finger solely at Labour, but they have made a lot of changes in the property market, trying to dampen supply. But on top of that, so if in a really, brief sort of nutshell, we have a sweeping change of the tenancy rules in New Zealand. What they effectively do is they make it a lot harder for you to raise rents, a lot harder for you to remove tenants, and they increase the time that tenants can go without paying rent quite a lot. On top of that, the government has passed legislation to mandate healthy homes. Now, I think that's a great idea. New Zealand obviously has been behind in terms of insulation and heating and construction of properties for a long time. So I think that's really great. But what we've got to understand there is that there's significant amount of cost involved for a landlord installing heat pumps and ventilation and insulation. And sometimes there's no tax deduction attached to that cost either. So if we put those two things in the mix, and then we fast forward to 27 March this year, the government announced the removal of interest deductibility from in situ properties, which by and large is the majority of housing stock in New Zealand. That is going to directly affect mum and dad investors who hold over 80% of the housing stock in New Zealand. They are going to be in a position where they've already incurred rising tenancy costs. So one thing that I didn't mention was the removal of letting fees. So that's something that hasn't previously been passed on tenants, but probably will be in line with all these changes. They've had letting fees removed, they've had healthy homes, they've had more stringent tenancy rules, so they can't raise rents as much. And now they've got interest deductibility issues, so they have to incur that interest, but they can't deduct it. This is going to put so much of a squeeze on landlords that they're going to have to raise the rent, despite the fact that a lot of them probably don't want to. And this obviously goes against the narrative of the government of the greedy property investor, which isn't the case. So what will happen in the market is that those investors that have to will raise rent. Those investors who are well informed, so if you're a client of mine and you've spoken to me about the interest deductibility changes, one of the first comments I make before people run down the rabbit hole trying to get fancy and add new dwellings is, are you raising your rent regularly? Are you charging commercial rent? Can it be raised? You need to actually put in a program now of raising it as often as you can within the new tenancy rules for as long as you can before you get to the end of deductibility. And then so those two groups of people will be the first to raise rents, and then outside of that, the market will do what markets do, and it will regulate. So that will become the new benchmark for rents, and everyone else within the market will follow suit. So that's the environment that we're dealing with. And one thing that I have spoken about a little bit lately is inflation. So that inflation is very real at the moment, and I believe for this quarter is running above 3%, which is well over the under 2% mandate that the government has. Inflation naturally is going to push the prices of everything up, and I don't think you would have to be living under a rock to not have noticed cost of things in New Zealand is rising significantly at the moment. And someone said to me the other day that petrol's up quite a lot. But it's not just petrol. It's groceries, it's motor vehicles, it's consumer goods. And if you're in the housing market and you're trying to build houses or consent new dwellings under these new rules, the cost of materials is increasing all the time. So I think the natural outcome of all these pressures on a market is that rents are going to have to rise because the people who are supplying the accommodation aren't going to be able to cover it themselves.
Yeah. And before if anyone that's listening at the moment or watching and throws something at their radio or their TV and goes, hey, you can't just keep increasing rents, we're not going to be able to afford it. In some situations, we're not just increasing rents if you're a landlord because you can increase it and you feel entitled to. If you listen to what Matt says and look at some of the legislation, some of the stuff that's been put into place has taken people that's a mom and pop or grandpa investor that owns one rental property for the last 20 years, and it's made it now that they've gone and not going to get any money and they're going to lose money. So fundamentally, they either have to sell it or they have to increase rents just to be able to help themselves around that piece at the moment. So it's not just greedy investors that are seeking or chasing to do that. And also one thing is, we can't just continuously increasing as well. The market won't just consume, rent is $500 this year, next year it's 600, 800. That can't just continuously going as well. It will plateau and reverse itself or hold itself at a certain period as well, because there's just the affordability of the rent is another big player there.
No, that's right. And I didn't mean to sound smug, but I deal with the majority of my client base are what I term mum and dad investors, and I don't mean that in any derogatory way. It's just simply, they're not even parents half the time. They're just salary and wage earners who are building a property portfolio fundamentally to provide for their retirement. They're not wealthy or overly wealthy, even though they might have a capital base. They simply can't afford this. And I think Grant Robinson's come on and said, property investors are already charging all the rent that they can. I know that's not true within my client base. I know that a lot of them have incurred the extra healthy homes costs and have not raised rents at all. It's just that the interest deductibility piece is the last straw that broke the camel's back, I think is the saying, and they can't actually absorb it any longer. And what we know from the housing market in general is that it regulates itself in terms of supply and demand. Rental market is no different. If there is not enough houses and there's more people to rent them than there is houses, which is currently the situation, rents will rise, whether the government likes it or whether the tenant likes it. And I think we have to understand that there's a lot of pressures driving it, and I agree with you fully. Please don't throw anything at the computer. Most of my property investor clients were horrified when interest deductibility removal was announced. Some of them were in tears. Some of them were trying to make rash decisions, and you can't just sell a property because it could be within bright light. So, this is not a pleasant situation for any property investor to be in.
Yep, totally, Matt. And to anyone out there, as always, if you've got any question around this for myself and Matt, just reach out on the details. It's on the description where you're listening and watching at the moment. And I hope you enjoyed another daily nugget. One question, 20 minutes or less, every day, 7 days a week. And as always, I hope to see you tomorrow.